Hi, and welcome everybody to our roundtable expert discussion, however you want to call that format. We are here to talk about one of the probably one of the most anticipated regulatory frameworks over the last couple of maybe even years in the crypto space, the MiCA. And as this is... Oh, is there still someone there? Here we go, yeah. And as this is a European topic, we are here with the European team. We have Sophia from our Paris and London office, Bas from our Amsterdam office, and Sebastian from Paris as well. And to us, MiCA cannot be thought about without this cross-border context. It is a pan-European regulation, and thus you have to keep that in mind. And for all of those cross-border themes, we always think about those as being very similar to an iceberg, right? For an iceberg, you can see only 30% of that iceberg and 70% are underwater. And this is the same in the regulatory world. The stuff you see is that European regulation, but there's a lot of going on underneath, which still is country specific. And thus, I'm very grateful for my colleagues to join us here today. So what are we going to cover? Real quick, we're going to give you a 1-minute update about where we stand on MiCA. We will take a closer look to what does MiCA mean on a strategic planning perspective and from an international perspective. And then we'll take a closer look at the jurisdictions here in the panel, what MiCA and especially the transition from the current crypto regime in those countries into MiCA means, and wrap up with our key takeaways. So MiCA, where do we stand? Overall, MiCA has been coming in a long time. It has been closely scrutinized and watched in all different jurisdictions. We've given many workshop sessions with regulators around the world who are very interested in what Europe is doing in the crypto space with MiCA. And it is primarily driven by the European Commission's political agenda for a harmonized framework within Europe to provide players in Europe with that big, strong European markets, something we do not have yet for the crypto space. The version of MiCA we have is politically final, but still the legal scrubbing and working on the text remains open. We haven't seen that version yet. And as we know from other texts in that European digital finance agenda like the DORA, there still can be quite important changes just from a technical point of view. So keep that in mind when you're working with the current version of the law. MiCA has become, or kind of reopened on a couple of aspects due to the current situation with a couple of crypto providers, most notably FTX. And for us, we still believe that MiCA mostly is closed. Not that much will happen. I think maybe the RTS and second level regulation that are going to come will provide more color on a couple of those open issues. But I think for us, most important it is to keep in mind after MiCA 1 will be before MiCA 2, yeah, which is already in the pipeline. And therefore, I think the work from a regulatory perspective probably will not end too soon. And with that, I will hand over to Sophia, who will give us a little bit a background on MiCA.
Thanks, Florian. Hi, everyone. Okay, so I'm going to try and do a very quick refresher on what MiCA is and what it covers before we dive into the more interesting aspects of the implications and how to plan for it. Okay, so what is it? As Florian said, it's a regulatory framework, a standalone regulatory framework for regulating crypto assets. It is going to bring a harmonized framework to Europe so that if you are authorized or compliant in one member state, you can operate across the whole of the EU without any further registrations or authorizations, etc., which is a big pain point at the moment. What does it cover? Clearly, it covers crypto assets, but the definition of crypto assets is actually quite broad, and it's covers things that you might not necessarily think of as crypto assets, and the boundaries, are quite uncertain. And it's not just native crypto like Bitcoin and Ether. You could get quite legally structured and backed arrangements falling within the scope of MiCA. There are some clear carve-outs, though. So anything that qualifies as a financial instrument under MiFID is carved out. NFTs, truly non-fungible tokens, are carved out, but not everything labeled an NFT will necessarily be carved out. So that's broadly what it covers. How does it regulate crypto assets? Well, it's sometimes referred to as the MiFID for crypto, but actually it's much broader than MiFID. It has, it draws on aspects of the prospectus regulations and market abuse and all sorts. So there are 5 key elements, as you can see set out on the slide. There is an offering framework which regulates, offers of crypto assets and admission to trading of crypto assets. That regime divides the world of crypto assets into 3 main categories. E-money tokens, which are crypto assets which purport to maintain a stable value by reference to one official currency. Asset reference tokens, which purport to maintain a stable value by reference to any other value or rights, and then all other crypto assets. And there's a kind of sliding scale of regulation depending on which category you fall into. For example, e-money token issuers, asset reference token issuers need to be authorized, whereas other token issuers don't. You may be wondering, what happens if there is no issuer, something like Bitcoin? How does that get picked up? And the short answer is the obligations may actually fall on the trading platform. So, issues to think about there. Then you've got the service provider framework that provides, generally, service providers need to be authorized. There's a base set of obligations that apply to all service providers, and then specific obligations that apply depending on the nature of the service provided. There is then, what's next on the slide? Market abuse. So restrictions on, market manipulation and insider dealing and all that kind of stuff, which applies to market participants, anywhere in the world in relation to assets that are listed on an EU trading platform. Then there are these monitoring and caps requirements, which was quite a controversial addition quite late in the day on MiCA, which essentially seems to try and address concerns of the European Central Bank around monetary sovereignty. So these are caps on asset reference tokens and e-money tokens denominated in foreign currencies, which are used as a means of exchange. And, the idea being that, we don't want a threat to the actual state-backed currencies when it comes to monetary sovereignty, etc. And then finally, there are certain restrictions on material acquisitions in relation to service providers and asset reference token issuers. So that's a brief overview. In terms of implications, I'm going to talk about a few broad themes, and then Baz is going to take us into how we actually go about planning for this on a more specific, in a more specific way. So some broad themes. The first one is reactions around the type of regulation this was and the comprehensiveness of the regulatory framework. So it's interesting, actually, because the debate around this has shifted quite a lot over the last few years. When MiCA initially came out, a lot of the comments were around how this is very heavy-handed and very comprehensive and it's going to stifle innovation. And then over the last year with the crypto winter and FTX, etc., those debates have shifted to, is this comprehensive enough? Are there gaps in here? So that's quite an interesting debate. There's also been a lot of debate around technology neutrality. And, there are questions around whether if you use a specific technology, you fall within the regime, but you have the same economic asset and you don't use this technology, you could fall outside the regime. And, how does that fit in with principles of, same regulatory risk, same regulatory outcome, etc. So lots of discussions around that and the boundaries we alluded to earlier, there are questions around there. Broad geographical scope, just very briefly, I would say, this is MiCA is a global issue because even if you're not targeting EU clients, you can fall within the scope of MiCA. Market participants across the world can fall within the scope of MiCA. So everybody across the world needs to be thinking about it and then not necessarily turning their minds to it if they're not based in Europe. Caps and monitoring requirements. So as I mentioned, these have been quite controversial, and particularly because the level at which the caps are set, some of the big USD stablecoins that are already prevalent in the market could fall foul of those caps. And so, there are questions as to whether this is effectively banning them from the EU market. DeFi, so some of the headlines around MiCA and DeFi have been a bit misleading because they suggest, MiCA doesn't address DeFi, which is true to some extent in relation to truly decentralized arrangements. But actually, as we know, many of these arrangements do have centralized entities behind them, at least at the outset, and activities performed by those entities could well be caught. Algorithmic stablecoins as well. Some people think, algorithmic stablecoins, they're issued by a smart contract. Who is the issuer? Who are the obligations going to fall on? Well, on the face of it, those algorithmic stablecoins are intended to be caught by MiCA, and so, you do need to think about those. Requirements around an EU presence. So lots of obligations that you need to think about, but one of the most notable ones is that service providers and e-money token issuers and asset reference token issuers need a physical presence in the EU. And for service providers, that means actually having their place of effective management here and one director resident here. So it's not just a case of a few token hires here. It's, these are real organizational implications. And then finally, just on ESG, I'll just mention this quickly, that, at one stage it looked like there might effectively be a ban on proof of work and, effectively Bitcoin. Now we've moved to a place where there are various sustainability disclosures which could, make proof of work based crypto assets less attractive over time, but there's not an outright ban. So a bit of a win for the crypto industry there. So on that note, I will hand over to Baz, who's going to take us through how to talk about this from a strategic perspective.
Yeah, thank you, Sophia. In terms of business planning, if you think that your business might be caught by MiCA, what should you do to prepare? Well, in our view, there are three key questions that are relevant. The first one is whether your activities actually fall under the scope of MiCA, and that is not such a straightforward question all the time. So this really needs to be assessed on a case-by-case basis, and there are various boundaries and exceptions that might apply and need to be considered. And as part of this assessment, you also might wish to consider whether there are any boundaries or whether you would fall under another regulatory framework, such as MiFID. And then depending on how you are caught, so as an issuer or as a service provider, and if so, what type of issuer or what type of service provider, the potential implications can be determined. So you can then determine whether authorization is required or whether a notification should be made, whether there's a local presence required, and what other types of requirements would apply. So then the second question, once the applicable requirements are clear, the next thing to consider is whether you wish to comply with MiCA or avoid to be caught by MiCA. So you need to conduct a cost-benefit analysis there. And this will depend on multiple factors. So your business model, your growth ambitions, and whether you intend to expand your activities in the EU in the future. Well, the regulatory burdens, so what regulatory requirements apply and what costs would this bring with it. And then the potential structuring options, to take your business outside of the scope of MiCA. And then as a third question, if you have decided that you wish to conduct activities that are regulated by MiCA, the key question then is around your preferred member state, and that of the preferred home member state. So that is the member state in which you will likely be physically located and in which you will be regulated and supervised. Well, and based on our experience with multi-jurisdictional comparative studies, for instance, in relation to Brexit, a lot of factors are relevant here. So, first of all, whether you already have a presence in the EU and in which member states, how easy it is to incorporate a new legal entity, and it has become even more important nowadays how easy it is to get access to a bank account, the experience and innovation friendliness of the regulator, potential language barriers, taxation and labor law issues, well, the travel and IT infrastructure, the talent pool, which will obviously depend on your business needs, and the general appeal of living and working in a certain member state. And depending on your business, you may also wish to compare the possibilities to become authorized to provide other regulated activities. So as I already mentioned, MiFID services. And there are also differences in how and when MiCA will apply and whether and to which extent the transitional regime is available. And that's what Sebastian will explain next.
Hi all. So in terms of transitional measures, you have this general application date of 18 months after the entry into force of the regulation. So assuming that MiCA is published in the official journal and comes into force, let's say in June 2023, it will really apply in December 2024. So on top of that, you have this extended application date for businesses that are already providing services in a member state. So they would have a possibility to have 18 more months to apply and have a license under MiCA. So this would give, in practice, until June 2026 to be authorized. But around that, there are uncertainties. The first one is the scope of the entities that would effectively could benefit from this extended application date. Will it be only applicable to entities that have a similar license status than MiCA licensed entity, or will it be also applicable to registered entities in accordance with the AML regime? Another uncertainty that we could mention here is that member states can disapply this extended deadline if they consider that CASPs can be subject to stricter rules than those of their national regime. So it's a bit difficult to assess, and there's some uncertainty, about all this, but we will see in later on that in France, a new law has confirmed that French DASP will benefit from this extended deadline. So we could expect other jurisdictions to also open on this topic. And to mention quickly maybe the simplified application procedure. So it's a possibility for simplified application for firms that are already authorized under national law to provide crypto asset services. But at this stage, again, we are not sure about the scope of the firms that will effectively benefit in each jurisdictions of this simplified application procedure. And this will have to be closely assessed and scrutinized in each jurisdiction according to their existing framework that we will speak in more detail with Bas.
Yeah, thanks. Well, yeah, as you can see here on the slide, it's useful to understand exactly what regulatory frameworks currently are in place in the different member states. Well, this analysis is obviously a rather high level, but it's good to know, also mindful of time, that we will need to be very brief on this, that we are currently completing a more detailed jurisdictional comparative study, and we will be hosting a webinar on that. So if you are interested, please let us know. Yeah, we will dive a bit deeper into the regulatory frameworks in Germany, France, and the Netherlands. Well, as I said, quite briefly. So I will start with the Netherlands. Well, first of all, it has been made clear that crypto assets are not considered financial instruments, so they are not subject to financial regulation and supervision. And in line with the EU AML legislation, crypto custody services and exchange services between crypto assets and fiat currencies are subject to a registration regime under the Dutch AML Act. And those service providers are subject to the full scope of AML requirements. But on top of that EU AML requirements, there are additional requirements that apply in the Netherlands, and those include requirements with respect to the suitability and integrity screening of holders of a qualifying holding. So in addition to those requirements with respect to senior management and beneficial owners, also requirements apply with regard to sound and controlled business operations and governance. And the designated regulator is the Dutch Central Bank, and applications for registration need to be submitted to the Dutch Central Bank. And well, this is a quite comprehensive process. Thank you.
Great, thank you, Bas. And really quickly on Germany. So in Germany, we have taken a different approach. For us, crypto assets are currently in scope of the financial regulation of the MiFID regime. That means if you're providing services in regard to crypto, you're captured by the normal banking and financial services license requirements, and thus also captured by the AML requirements. In order to get the license, that's the normal banking financial services licensing procedure, which usually takes between 8 months and 1.5 years. And I think one of the key points there is, if you take this international strategic thinking perspective, where do I want to put my base in order to be able to play in all of Europe? It's not just about the license application. I think this is one of the key points. You will be an ongoing regulated entity under MiCA, and so your key strategic thinking should be, where do I want to be regulated on an ongoing basis? Where does that make sense, especially with further businesses I want to maybe draw into or build upon my crypto license regulations. The peculiarity under German law is that we do have the crypto custody license requirement, which is not based on MiFID, and that means for the transition into MiCA that you probably will not be able to rely on this notification regime with Article 53, but you would have to rely on that simplified procedure to get the MiCA license if the German government decides to implement such regime, which at least I am not aware of the current status thereof. All I know is it would be really, really strange if the German government would try to make life more difficult for already licensed entities. So I think we can expect to get that regime, but that is just something that needs to be factored in the timing of your planning, because it's not necessarily the case that this transitional procedure will be available once MiCA comes into place, which does not mean that you have to stop providing that service, but that might hinder you in passporting that service until you are within the MiCA regime. So this is just something to keep in mind on the timing side. And for France?
So yeah, just quickly, because I guess that we have run out of time now. Yeah. No, there have been intense parliamentary discussions in France with a lot of updates, really interesting, relating to the regulatory framework, with a reaction after the FTX bankruptcy, with a new, really a new reinforced new requirements for registered DASPs in order, to protect the client assets. So I will be happy to speak about it with you later on. Maybe I will give the hand to Florian.
15 seconds wrap up. I think the key point here is that the cross-border perspective is very important in your strategic planning, that you will have to keep in mind that you will have new competitors throughout Europe coming in from Europe. You'll be able to compete in new European markets. It will become easier for banks to compete in that space, and that ongoing relationship with the regulator will be important. And once you have that crypto licenses, it probably will become easier for you to venture into the MiFID regime and so on. So just don't think about that on a too short of a time frame, but think about the broader picture once you're setting up shop. Thank you.